Have a few minutes? You won't believe what you can do with it. Open a Regions checking account online in as little as 5 minutes. Then enjoy award-winning service and banking tools and tech that help you live in the moment. Learn more at regions.com/live in the moment. Regions Bank, member FDIC.
Live from the Subaru of Gwinnett Studio, inside the Sonesta Gwinnett Place Atlanta Hotel, it's time for Regions Business Radio. Regions Business Radio is presented by Regions Bank. Brave the beginning. Member FDIC. Now, here's your host, J.D. Mealer.
Thank you, Mike Salmon. Welcome to Regions Business Radio. It's a great day to be together. You know, typically I do a kickoff and I talk a little bit about the market. I'm making a game time decision that I'm not going to do that. I'm so excited about the conversation I was just having with our guest today, Mr. Matt Stinchcomb. Matt, thanks for being here.
Man, I'm fired up to be. I'm glad that you're calling an audible on my behalf.
I am.
Right here at the line of scrimmage.
Well, I don't know that a quarterback ever called an audible to you.
No, that's true. I was on a need-to-know basis, which was just block the guy 6 inches from your face, and other things will happen in and around you, but we'll keep it simple for you meatheads up front.
Well, as a meathead up front, it's the least I could do. I mean, it's like I'm calling you to go on a post route or something.
Oh, that would be a mistake. Yeah. Don't do that. You might want to call a second audible.
I'm hoping that your post route is better than your golf swing.
It unlikely. I will say they probably have been used with the same level of frequency. That's for sure. I haven't attempted many of either.
Like I said, my guest today is Matt Stinchcomb. Many of you know him from his days playing football at Georgia. He's an SEC media personality. He's a CFP, a college football Hall of Famer. But more recently, I got to know him through a round of golf. We were doing something for the Hall of Fame, and Matt, I just got to tell you that. That day was special to me just because I felt like we were just buddies. I mean, we had a nice round of golf, just some guys playing and having a good time. And your personality, I think, honors not only the institution that you went to for school, but the entity that you now run, as well as the entities that you support. I'm thinking about, the nonprofits, one in particular, FCA, for example, that we both know very well.
Yeah.
I just want to start by saying thank you for being so welcoming and so engaging, and just a guy that you can be friends with out of the gate, man. You're so kind.
Hey, thanks for not being a jerk. I got to tell you, you're welcome. Well, y'all, as you've already alluded to, I am a horrific golfer. And so it helped that we were on a pretty nice track that day that a lot of folks enjoy, that folks actually know what golf is supposed to look like. Mm-hmm. So hopefully I didn't disgrace the hallowed grounds as much as I likely did. But y'all are a fun group to be around, because I will say there's some sticks in that group, right? You included. And you never know, because you get out there and some guys are like, man, they're in it to win it. And you're going, you realize like there is no purse. Like there are no winnings, right, guys? Yeah. At best you get a plaque with your name spelled wrong. So it's maybe let's just have a day. And I think I ended up having to bug out at the end, but didn't y'all? We collectively came in what?
I think we
fourth?
came in fourth. We were just outside
just off the podium.
Yeah, we're just off the podium.
Isn't that interesting?
Yeah, that's how that works.
There's some erasers involved, maybe.
Yeah.
But y'all made it fun for me, because you never know, especially when you're lousy at something. You don't want to ever be the anchor, which I inevitably will be, and y'all were a fun group of guys to be around.
Well, you're kind to say that as well. You last year our pro didn't show.
That's a low bar for me to clear. Then.
So our expectations are pretty low, and then but the truth is, when we saw your name and we know who you are as a man, as a husband, as a father, as a businessman, that was what. We were so excited to spend time with you about. And
you clearly didn't know who I was as a golfer. Otherwise, it would have been the enthusiasm would have been dampened. I appreciate you saying that.
You were so kind, and thank you too. Subsequently, for whatever friendship we have. But what I wanted to do today is talk about the company that you're a partner in, Sterling Seacrest Partners.
Yeah.
A local insurance, what I call it, a brokerage.
It is a brokerage, yeah.
Okay.
Brokerage and consulting firm.
Yeah,
Yep.
tell us about it.
Yeah, actually, we not that far too distant past merged with another firm, and because in the insurance brokerage space we are known for bleeding edge marketing from a branding standpoint, we are now Sterling Seacrest Pritchard.
Okay.
So we co-opted the P in Partners, and so we don't have to change the email or anything. We get to keep that in the email address. But our the fine folks at Pritchard and Jordan, which is a long-standing independent insurance brokerage firm based out of Atlanta, was a friendly competitor and peer for a lot of years, and so we recently merged with them. I say recently; it's well over a year, coming on 2 years.
Okay.
So it's been a really exciting time for us. It's an interesting time in our industry, really, because there's a lot of consolidation, a lot of acquisition, and we are a fiercely independently held private brokerage, and we think that that's important. We think that matters.
Yep.
Chief among those reasons, we own ourselves, so we're beholden to no one. There's no outside equity or financing, so we don't have any partners. Our producers are our partners, and so because of that, we get to kind of chart our own course. We get to allocate our resources as we see fit. We don't have a third party in the room with us that says we're chasing X amount of margin, and so you need to get to that number. And we all know how that typically happens, and it's oftentimes you get squeezed on the expense side of the ledger, and the quickest way to get there is to eliminate resources and support for your clients. We don't have to worry about those sorts of things. There is no external pressure because we run ourselves. And so now we're the largest independently held brokerage in the state of Georgia, one of the largest in the country now.
As measured by brokers,
number
revenue?
of overall revenue. And there's a number of different metrics, but we've got about 300 folks that work with us now. We've got 6, soon to be 7 offices, and 4 different states. So we're got a presence in Florida, here in Georgia, a couple offices here in Georgia, presence in Alabama, Arkansas, South Carolina. So
interesting. Sounds like an SEC footprint.
Yeah, it's an interesting overlay. I didn't quite look at it that way, and I've not consulted with the commissioner, but perhaps maybe we should see if his expansion plans are maybe more aggressive than ours. I don't think we're going to be in Oklahoma anytime soon, but maybe.
We're not in Oklahoma either, but we are the official bank of the SEC.
Well, that's a great point. Well, what? Here pretty soon, maybe it makes sense for regions to branch out even further, right? Reach into Texas, et cetera.
Yeah, we have we just launched Regions Business Radio in Houston. This actual podcast that we're doing now originated here in North Atlanta and has been so successful that we opened it up to other markets. In our first market, our second market, we went to Nashville, then we went to Houston, now we're in Orlando as well, and it's going really well. And the reason we do this is for conversations like this, so that we can bring friends like you on, use our network to maybe enhance your network. And you said some things as you were describing your firm that I think resonate well with our Regions customers. And we talk a lot about relationships. And I noticed on your website, it seems to me, so our mantra at Regions is local relationship management with industry expertise. I think that goes pretty well. So when I say your website, you guys had some resources where you brought in industry experts for webinars and things like that. But yet your clients probably have a Sterling Seacrest agent that they rely on heavily. So if our mindset is local relationship with industry expertise, how does that fit with you guys?
It's a great way, I think, to reflect how we come to the market as well, in that we're not built for producing the business. So I sell you to come work with our firm and allow our firm to represent you, and then it's kind of see you when I see you. And now I'll hand you off to some team and hope that they can support you in a sufficient manner. Now, the way we are structured and the way that we've hired and grown and joined with partnerships is that our producers are involved in those accounts, meaning that they have competency and relevant competency with whatever our deliverable is for that company. So it's not like hey, see you at the golf course and we'll go shuck and grin somewhere, but really and truly you're working with fill in the blank, my vertical team that's in the construction space.
Right.
But what makes it ideal from a scale standpoint for us is that we do have vertical expertise in areas where that is a requirement, and even a subject matter expertise. So we have within the firm, among our partners, individuals that do have expertise in the cybersecurity space, which is one that changes, almost the sands are shifting under our feet right now.
Oh, yeah.
Requiring almost constant updating because of where that space has evolved.
We're very familiar.
So but because of that, because it's not when you reach out with issues, questions, it's not a 1-800 number. You're not talking to, our headquarters in Sioux City, Iowa. You're talking to you have access. So the way we've put it is that we're large enough to execute, small enough to care.
Oh, I like that.
And that's I don't know if that's an official mantra or not, but maybe I'll float that out to the partners. But the whole thing is that we don't concede market access. And we feel as if we don't concede really market expertise from a coverage standpoint to anyone within the space in which we're working or we seek to work with. So we're not looking to write Delta. We're not going to run out and chase down UPS. We consider ourselves a middle market broker, which is about the most vanilla statement you can make. 'Cause you can go
it's
find
pretty
somebody,
nebulous.
Yeah, you go talk to our folks at Marsh McClellan. They're sitting there going, "This is the largest brokerage in the world," and they'll say, "Oh yeah, absolutely, yeah, we're a middle market broker." And how would you define that? Well, there's a million different ways you could do it.
Yeah.
But where we think we distinguish ourselves is that we've gotten large enough to where it's not as if, hey man, let's just get this in the barn and then we'll figure out what to do with it once we get it in the stall.
Okay.
It's no, we absolutely know how to ride this horse. But just know that you're going to know the rider. It's not going to be some guy that it's like, hey, yeah, thank you.
Hunter Skinner.
That's exactly right.
How about client selectivity? I hear you talking, when you're saying that, I translate that to client selectivity.
Yep.
You take all comers?
Nope. If you're looking to just chase a number, we're not for you. If you're just chasing
what a novel idea,
a premium, which let's be real, a lot of folks view insurance. They're not waking up every morning and thinking about their insurance unless they've got a claim. Right? This is an element of most people's business where the worst thing that can happen is if they actually use it. Right? I mean that's the whole thing. Is I feel like I have to have it. Right? And as soon as I use it, something bad has happened. So because of that, nobody's waking up thinking about this, and it's largely thought of as a commodity.
Well, we require it. You want to borrow money from Regions.
Yes.
And we want that
box that has to be checked.
We want that piece of equipment, insured. You need a loan on that building. Sure. It's got to be, hey, and what if something happens over there and we have all this equipment and if we have an all business assets filing, we need some liability insurance.
Sure.
We require, but you're exactly right. Even individually, we rarely think of insurance until we need to pull the trigger and make the call.
Right? Yeah.
I got a son turning 16. I mean,
that'll be a lot of fun.
Yeah,
that'll cost you. Hey, yeah, I've got 2 of them now, so it's just
can't stand it.
And so because of that, right? You're sitting there going, nobody is waking up and going, this is my leading thought as a business owner, as a administrator, someone in a position of authority, decision-making capacity. No, you're too busy trying to turn the dollar, trying to keep your employees, either engaged, operating, profit margin, et cetera, to where you are in the enterprise of whatever it is you're making, whatever widget you're turning out.
Yeah, and they're turning out these widgets, and you got JD and his team coming in. Hey, what are your covenants? You want this line of credit, and they're trying to squeeze to keep capital going. And unfortunately, the decision matrix often turns to, well, insurance is something that I can find a cheaper. And it's interesting, I think, because we've fallen prey, with all due respect to our brethren in similar industries, we've fallen prey to marketing campaigns that tell you I'm not going to say any consumer insurance companies' names, but one call and save 15% on your insurance, or this stuff like that drives our industries. Whether they want a cheap mortgage from us or cheap insurance from you, I'm a guy that still thinks you get what you pay for.
Yeah, it's a great way to look at it. To me, it's look, we walk in everywhere, and our operating assumption is, and let me guess if this is where your head is, Mr. Prospect. You probably want as much coverage as you can get for as little as you can pay, right?
And they're going, yes,
and
sir.
Going, yeah, we sure do. Actually, I really don't want as much, but I gotta get. But if I could get you more for less, would you be interested? I mean, of course you do, right? Nobody's looking to say, golly jeepers, man, I want to have this full suite of insurance coverage. Don't really think that I need it, but I just want to sleep better at night. A lot of times, the difficulty is helping them realize what the actual risk is that you're addressing, and then an efficient way, but an appropriate way to address it. And that's it. That's the game. The problem is that everybody's thinking, you know what, I feel like I just have to have this because of perhaps it's a financing requirement, whatever. And so because of that, you're just a number. And we don't work well with folks like that. We're not looking to win business that way. We absolutely want to get the best possible premium that we can for our clients. At the same time, if that's all you're looking at, and there are some instances where someone might come in, a carrier that we don't have access to, which is hard to imagine because we've got about as broad a market access as you can get, and certainly as much as we'd want.
Yep.
But if you can find somebody to buy your business and you're going to leave us over that because you don't value the other elements of our proposition, then the acquisition costs are too high, and that's in a client that we really don't want.
We're on the same page. I mean, it's crazy. We talk a lot about client selectivity at the bank, and we also talk about our definition of sort of middle market in the commercial group that I run. And we're talking probably, let's say, $20 million in revenue to $250 million in revenue, and we can peek over that a little bit, and we can sort of peek under that a little bit. But the ongoing conversation about value, and look, every company, every business out there needs a Regions, and they also need a Sterling Seacrest. They need us. And what I keep telling my folks, and this is a hard mentality to get, is oftentimes that low hanging fruit is the rotten fruit. You got to climb up higher in the tree to get the sweet stuff. And I bring that up because I love what you're saying. You get some. Let's go back to your scenario. You walk in and they say, "Hey, I want more coverage for less." How do you change that guy's mind?
Well, I don't want to.
Okay.
My whole thing is that that's great, and we want to get you as much as you need for as efficient a price, a lower price, right? Let's just speak plainly.
Yeah.
For as low a cost as we absolutely can. Of course we do. That's the gig. If you're truly trying to bring value, that's the gig. I'm not chasing a higher premium so I generate a higher commission. A lot of our stuff is fee-based because of that, because we want to be
transparent
on the same side. Yeah, and on the same side of the table as our clients. Now, we're partners with the carriers and the folks that are actually assuming the risk, et cetera. At the same time, I don't like the idea, and it's hard to escape, that if my premium goes up, you get paid more, don't you? Well, yeah, technically I would. On a commission basis, if you're paying more in premium, then I could realize more in commission. So there are instances where we'll seek to get on a fee basis where it's like, you're going to pay us what you're going to pay us, because your insurance costs might go up next year due to a more macro market environment.
Right.
Because of whatever the property exposures are this year, whatever the casualty incidences are, because of what's going on in the tortious acts and some of the climate in the state in which you operate. And I'm not going to do any more work for you, but I'll get paid more. So can we kind of detach from that whole environment so that you realize that I'm going to earn my compensation and it's not subject to some outside influence that I'm not doing any more work, but I'm going to get paid more just because.
Yeah.
And if we can do that, we do. And a lot of times that makes a lot of sense.
Yep.
And we're exceptionally transparent, and I think it makes sense. This is a business transaction. You are paying us not just for market access, because in the spaces where we work, a lot of our competitors, they can probably access. There's probably some redundancies, especially on the property and casualty side, where they have access to the same carriers. Now, they might not enjoy the same types of relationships that we do. Mm-hmm. We like to think that our submissions are cleaner, that we're a little bit more thorough, that we class businesses the way that they're supposed to be classed, et cetera, on our submissions.
Very good.
But regardless, you're paying us for advice. You're paying us for advice. And if I'm not going to give you any better advice this year than I was last year, then should you be paying me any more?
Yeah.
And the answer is probably not. Now, there are some environments where you're sitting there going, look, you had a rough year. We're probably going to have to market this thing thoroughly. It's going to be a very difficult marketing process. Maybe you've made some acquisitions or divestitures. So, it makes more sense perhaps for us to revisit how we're compensated. But for it to be just this kind of autopilot, hey, you're paying more, we get paid more type of environment, we're not big fans of that.
So how do you battle? The perception maybe that somebody writes you a check for a premium and then they don't see you? I mean, I'm making an assumption in that question that you approach client engagement differently than your competitors.
We do. Yeah. The idea here is to position ourselves as an extension of the client, of their risk management department, of their benefits department, their HR department.
Okay.
And so because of that, if anything, this goes back to the whole, if you're just chasing a number and you just want us to go away and then show up with a better number next year, that's not us. And it's not only not us because we don't want to be subject to a third party's number, because that carrier is going to come up with their number for a variety of reasons that might be outside of your specific risk. It's also because we'll wear you out otherwise. If you don't want to hear from us, again, we're not your broker. That's not the whole idea. Is we want to be adjunct to what it is that you're trying to accomplish, and in some instances we want to be in the driver's seat if that's helpful to you and you don't have the resources internally. Sure. And at the very least we're riding shotgun. But if it's more along the lines of just see you down the road, that doesn't mesh with how we have chosen to build the firm. The firm is built to be consultative. We are a brokerage in that we're accessing the markets, we're placing business, et cetera, but we are consultants in that it's just a mechanism for us to be paid for the advice that we're giving you. And if I only give you advice, quote unquote, by providing you with a number twice a year, right, at renewal, and then maybe a pre-renewal meeting, then how consultative can you be?
Yeah, not very.
So the goal is not to get in the middle of their backswing, right? We understand the widgets need to be made, the service needs to be provided, whatever it is that they're deploying for their revenue generation. But we want to have a presence there where they know all along that there's not this kind of peaks and valley presence where we're riding alongside. It might be a quiet travel partner, but we're right there in the passenger seat, if not in the driver's seat with them.
Do you find that that your deepest relationships may be those that are a little more complex, so that the corporate structure of your client has somebody that's responsible for your product? In our world, if we can interact directly with a CFO whose job is to run the finances of an organization, while the CEO executes executive, responsibilities, and a COO is operating, those type of relationships allow us to go deeper. We can bring more ideas. We can bring more options. You would think that in North Georgia, for example, within banking, if somebody has, for instance, right now, we'd like to load up on some multifamily apartment real estate deals. Well, if somebody's experience or if they've been trained to only go to a bank and ask, what is your rate and fee? It's the same thing in regards to insurance, when in fact there are other options for what they might want to accomplish. We try to talk a lot about what are you trying to accomplish. And on a sales call, and for those listening, I'm using my air quotes, on a sales call, if we can have a customer or a prospect say to us, I've never thought of that before, we think that is the the highest compliment that we could get because we've brought an idea that's, and as a matter of fact, last week I was in Union City at a company. I'm not going to mention it online. We'll mention it afterwards. I think they may be talking to someone on your team, and they were going through how cash ran through their company, and we brought an idea from someone in a similar industry, and they said that. They were like, well, we've never heard of that before. Tell us more.
Right.
You know, and in that instant, we were adding value beyond rate and fee.
Right.
I find it very interesting that we're targeting a similar market with a similar approach to business. We're not always going to be the cheapest, because we hope that our engagement with a company will help them navigate rough times, expand when they need to expand, or just enjoy a little bit of the ride that they're on right now by having a highly engaged banking team that could come along with a a highly engaged insurance broker team, and let's see what we can do together.
Yeah, I like that. That's a great way to describe it. It's you want to be more than a banker. We want to be more than a broker.
That's right.
So when you look at us, it's not just, when you think insurance, okay, we think of these guys, and a lot of people talk about trusted advisor. You want them to be that trusted advisor. Well, we also know that. I mean, yeah, you might go to this one person. Possibly, is it your banker? Is it going to be your insurance broker? Maybe. But we want them to come to us with problems so that we can help try to find them solutions.
Yes.
And the whole idea, more than anything else, is for them to trust that they're getting value. And if you're just chasing cost, I don't know that that's even a quality to be pursued. If it's just cost, you should be chasing value.
Yeah.
How much am I spending? Okay, but what are you getting for it? I can sell you a junk policy for dirt.
Yep.
Now, it's not going to get you much. And at the point of claim, maybe it pays, maybe it doesn't. It depends on, there's tons of exclusions and restrictions. But, hey, man, it's cheap. Did I win? Did I win the number? Because we're just chasing the number, right? Or can I get you the coverage that you actually need based on whatever it is that you're doing, at a price that's affordable, the best price that I can get you? It's the value proposition of cost, versus execution in the point of claim.
Yep.
In our little world where we're going, you should be chasing value. And I hate, it's hard to, we're on a podcast, so I can say this. It's hard to sit in a meeting and be like, hey, guess what? You're looking for the wrong thing. You're looking for the lowest price. I can get you a crazy low price. No problem. I can get it. There's always something I can do to cut your price. That's a fact. In either side, on the P&C side, on the benefits side, there's always something that I can do to help you pay less. The question is that what you want to actually get?
That's
is
right.
That what you want to get? Because, like you said before, you get what you paid for. There's ways to introduce efficiencies, no doubt. But the thing of it is that if you're just looking at that number, I think you're 1 degree off. That's a key component. But the other piece is, what are you getting for that number?
For real.
That's our whole thing is, let's hope you understand your universe of options. And there are more than you probably think. Let's hope you understand how you can address, like you said, what do you want to do? What are you trying to accomplish? Let's hope you understand how that universe meshes with what you want to accomplish, and then decide. Not, hey, here's your costs. These are this policy right here costs this much, and this one over here from this provider, guess what? It costs this much.
That's the decision matrix for 90% of the people that you have.
Well, they turn to the last page of the proposal, right?
Yep.
And they look at the number at the bottom right corner of the page, and like, oh, that number's too much.
Okay, so let's go. Let's. This is so good. I love this type of conversation because it helps me get better. But okay, to get to that point with someone, it takes time.
Yeah.
It takes proving yourself. Sometimes over and over. The strongest relationships that you will typically see in an industry like ours, insurance and finance, are the ones that you work the hardest to acquire over the longest period of time. I met Amy at a restaurant in Carrollton, Georgia. I didn't marry her till 8 years later. Took a lot of convincing, right?
That's a long sales cycle, buddy.
It was a long sales.
Oh, no, JD.
I tried to close it, and I never could. My point is,
points for persistence.
Yeah, I built up a lot of value.
Yeah,
in those 8 years.
Yeah, you did.
But I use that as an example because, somebody just calls in and says, hey, I need an insurance policy.
Right.
It's probably really not the company that you want to.
No.
And are you obligated to quote on it? Yeah, because it may be somebody's brother's cousin, uncle's aunt that knows you, and, you got to do it.
Sure.
But I don't think that we at Regions are going to shy away from a long sales cycle, I guess is the point that I'm making.
Yeah. Because
we get to prove ourselves over time before they ever write us a check to repay a loan. And look, I need to move on from that topic, but client selectivity is important. Value, how do you build? And sometimes it requires us as executives or our bankers or our brokers as producers to be comfortable bragging on themselves a little bit by sharing a story, whatever it may be. When you were talking a minute ago, an image popped in my mind. Now, this isn't commercial. It'd be more consumer. But and this is really weird. I was driving home a couple weeks ago. I can't remember where we were. And it's a road that I drive down 3 or 4 times a day. And there's just a house there, and it's got a nice yard. And I noticed something really weird about the house. A car had run into this house.
Whoa.
Like there was a 3-way stop or a T area of the road, and somebody just ran right through a stop sign and into some dude's front yard. And he must have been back at the pool because he was in the front yard with his swim trunks on, and he's looking, and the airbags had deployed.
Wow.
And I think that people were, thankfully, the drivers were okay. They were out looking at the car. But I bring it up in this conversation because that guy never dreamed that his house was going to be run into by a car. And what if in business you don't think through everything that can happen? I'm not saying that a car is going to run into your business, but you never know what's going to happen.
Right.
You never do.
That's part of the part of the gig is just to help folks think it through. And I would say, half the time, maybe even more so, depending on where they're currently placed, you're sitting there going, you're overinsured here. You are looking at a risk that isn't that real, and or maybe you should self-insure this. So instead of trying to offload this risk via a policy and have someone pick it up, Travelers or somebody else, why don't you retain some of this risk, right? Because what is the likelihood of that? And it's not just in the commercial space, and we do it all the time with the benefits. We're sitting there going with higher deductibles on benefits plans where we're sitting there going, you're probably overinsured. You're going to pay your premium. This is what we know for a fact. You're going to pay that premium. You're going to pay it however y'all are handling your deductions, twice a month. That premium, your contribution towards the premium for your health coverage, that's coming out. That's a certainty. So you go on ahead and figure that number up annually. That's what's coming out. And you're paying that number, a higher number, because you want this lower deductible. Well, I don't know. Are you ever going to meet this deductible? It's $1,500, let's say, or something. Are you going to spend $1,500 in healthcare? This year, over the course of this year, we'll tell you that statistically you are not.
Okay, yeah.
And yet, and you might know, and it's specific to you, but the whole idea is don't treat something that is possible as if it were probable. And if you're looking at,
hold on, wait a minute, say that again. That's I want to hear that again.
So it's where you, especially when you look at like healthcare deductibles, for example, like people will see and they'll say, "Oh my gosh, it's a $3,000 deductible," and they spend it in their minds right then and they go, "I don't have $3,000 to spend," and you're going, the likelihood is that you're not going to need that $3,000 to spend. The likelihood
don't make something
that is possible and treat it like it's probable.
Ooh.
And so, and in our world, that seems like the inverse, right? Because I'm trying to, I'm the insurance salesman, right? I'm in here to scare you and then sell you something to make you feel better. That's the perception, right? But what we're saying is that, look, because we are positioning ourselves and we view ourselves as part of your business, we want to share what it is that you want to accomplish. And how do we do that? Well, let's take a clear-eyed, informed view of what the circumstances are. You want to accomplish this, whatever this is. So let's look at how we can get there. And is what you want to accomplish even something that you should be targeting? We talked about it earlier, where is it lower cost? Okay, should it be lower cost, or should it be let's get more out of what we're already spending?
Yeah, for
and
sure.
Is there a way to take the existing number, whatever it is, and say, I'm spending $100 a year on this health care. I feel like that's too much. And you're going, well, you're going to be hard-pressed to get less, but I'll tell you what, you can get more out of that $100, and you could deploy this differently. can I reduce your 100 to 80? I can, but we're going to have to cut into the bone now. And do you really want to do that? Or I can keep you at 100, but I can get you more for that 100. Does that make sense to you?
For sure.
And so those are the types of conversations where you're sitting there going, like we talk about, just assessing the scenario, and let's just look at it through clear eyes and 360 degrees, knowing that you don't wake up going, hey, what's my risk exposure?
With a meaningful conversation other than, hey, go call Matt and the guys over at Sterling and get us a bid on this other thing. We gotta know. You're best when you know what's going on.
Well, that's what, like within our industry verticals, because look, we know.
All right, tell me which verticals.
Well, we're generalists, so we'll write just about anything, right?
Okay.
Because we've got offices that are that can deal with coastal exposures. They're actually located in coastal locations because of it. Office in Tampa, office in Savannah.
Okay.
But from an industry vertical standpoint, what's been important to us is that we know everybody's got a brother-in-law, everybody's got a roommate, everybody's got a golfing buddy. So we get all that. We kind of like to think that what we're doing expands beyond just, hey, we're fun to eat chicken wings with. And so because of that, the industries where we have enjoyed probably the most success and where we've kind of gravitated from an expertise standpoint are ones that actually require some nuance and informed placement, where it's in the healthcare space, the professional liability exposures in and around engineering firms, the construction space, where you can't just show up and be like, hey, you know what? We just moved in the neighborhood. We're members of the same country club. I want to do business with so-and-so. I mean, you can, but let us kind of walk you through what this world looks like and what it is that you're doing and how we would approach it. And oftentimes we're able to convince that maybe a decision should extend beyond just personal relationship. And because of that, that's been very helpful. The manufacturing space, the real estate space, we call it largely, the hospitality space. It's mixed-use developments. It's hotels, hospital systems, independent healthcare practices, surgical practices.
Construction, you do surety, you do bonding, you do that. Do you do anything in regards to? You mentioned it early on, right out of the gate, cybersecurity. Is there insurance to protect companies from cyber attacks, cyber warfare?
Absolutely. And the interesting elements there is that some of the more legacy policies and so it went from cyber insurance. What are you talking about? I don't need that. And everyone has an IT department. It's like, we got it handled. We got it all wrapped up. And you're sitting there going, look, we're not here to tell you, bud, that you're not doing your job. I don't doubt for a moment that your firewall is whiz bang awesome. What we're saying is, so it took years and years to educate that we call it cyber. You read about cyber breaches in the paper, but it's privacy insurance. It's the information that you're a thumb drive away. You are an email with the wrong attachment away. You are what did we do with those files during the move away. You are a laptop left in a who knows where airport that isn't recovered away from a breach. That's not getting hacked. That's not getting targeted by some, North Korean terrorist cell that is trying to get into your company. And you're going, we're making socks. They're not going to be doing that to us. And you're going, that's not what this covers. This is the idea here is for it to step into the breach of or the gap where, oh my gosh, we've lost we've lost control of even our employees' personal information. Well, technically now you have a breach in that regard. Well, we're an all paper operation. Okay. I mean, what happened? What happened to that file cabinet? Yeah, we moved offices, don't know what we did with it.
I've seen it happen.
That's a problem. And because of the industries in which we work, right? And frankly, so let's go back to the kind of cyber digital space, right? The technological based breaches where the incidents of ransomware, where they come in and they say, look, we're not going to take your information. We're just going to lock you out of it.
Yep.
And if you want back in, what do we see with the Colonial Pipeline? So things of that nature. And that changes all the time. And the legacy cyber policies that used to feel more all-encompassing, they're not. Those companies are in the business of making money, right?
Yep.
And they're supposed to pay claims, et cetera, but they're also not looking to take a bath. Those policies have, over the years, constricted the breadth of what they're willing to cover. And if you're not paying attention, you're sitting there going, well, now, wait a minute. I've been with fill in the blank, will not name carrier names, for X number of years. We had this policy in place, and it's kind of been on autopilot. Well, if you don't check it, then there's a very real, in fact, a likelihood that it's not going to be covering a material element that you thought it was.
Absolutely. Yeah.
And that space, we're constant. We can't stay on top. I can't know everything all the time.
Well, we're always changing that too. I mean, it's amazing how many different episodes of fraud, carelessness, cyber security, all of those things together that cost companies money. And it's always, well, we don't want to pay for this, or we don't pay until it's too late.
Right.
For us, it's something as simple as positive pay, where you send to us your check register, you send us check number, check amount, payee name. We run that through our system, and if any of those things are off, we'll kick it out. What is it? It's $200 a month. Well, would you rather pay? We actually say it's like an insurance policy. You pay the $200 to do that, or when you lose $18,000 because somebody washed a check and put it in their checking account at another bank, these are conversations that need to be had. So cybersecurity, privacy insurance, things like that is a risk. By the way, did you major in risk management?
No, I was a finance guy.
Okay. What about? Do you guys ever dabble in AR insurance?
Yeah, from a accounts receivable standpoint.
Yeah.
Yep, absolutely.
Okay.
So we're looking at so when we go to market, there's really nothing in that commercial space. If it falls in those kind of buckets, the property and casualty or healthcare space, we can help you.
Okay.
And even if it's not a placement directly, right? So if it's like executive benefits, for example, buy-sell or COLI-BOLI and the like, where it's more of a life insurance play, individual or independent life insurance play, we can help you with those, but it's not going to be internal. Otherwise, you're sitting there going, look, there's a way for us to tackle that. And, even if it's like, it's spaces where it's not even a policy that's being placed, not even an insurance policy. Maybe it's a product that helps you with your how you fund your HSAs.
Oh yeah,
where we're sitting there and we absolutely consult and help in that regard. Can you provide your employees with a credit facility of sorts that will allow them to make contributions tax-free or pre-tax? And and that's not an insurance product, and we're not going to get paid on it, but we can absolutely help you.
But you've added value. You've helped them accomplish the target.
That's exactly right. And to help them see where it would be relevant. So inevitably those are tangential to what it is that we're doing for them, and the benefits are in the property and casualty space. But it does make sense ultimately.
I have I got to go through just a couple more things. I think that our heartbeat is different in business. So when we played golf a couple weeks ago and got to know each other, one of my guests was a guy, Larry Vandiver, who works at America's Home Place up in Gainesville. I bring him up because I love, when I think of Larry and I think of the company that he works for, I don't think of Larry and America's Home Place as them. I think of Larry and America's Home Place as us, as we. I love when I refer to my clients and the people that we do business with as we. I think if you get to that point in finance or in insurance or advising, consulting, that's sort of the pinnacle of a business relationship. Comment, I mean, how does that sit with you?
Oh, it's exactly the way. We actually say that in meetings, and then we'll try to clarify because we don't want to, you don't want to be too presumptuous. But a lot of times that's what it says is we use that kind of collective pronoun, I guess. Or
yeah, I guess so.
Haven't worked through the pronouns recently, but it is we. It's not y'all.
Yeah.
Or when you, as a second party, now we're sitting there going, look, we view ourselves as being on that same side of this whole proposition, which is, so if we ... if we roll out this approach, then how do we address that? And these are the ramifications. And we even, we do that even in our conversations with our carrier partners, the folks that are actually insuring or taking on this risk is, so if it's not, so if ABC company does this, and that's just kind of part of, I do think, is it semantical? I think it goes beyond that because it speaks to, and it kind of engenders in your mind that if they win, we win.
Yeah,
and
we're
if
in
they
this
lose, we lose.
Yeah.
So it can't be. There needs to be. It can't be kind of a zero-sum game where if they're losing over there, but we're winning, then something's messed up. Now it's not we anymore. Now it's us and them, and that's not the way that we look at it.
I mean, can you think of a relationship that's successful that you think of us and them? I mean, successful relationships.
I can think of some that persist, but I don't think that they should. That's for sure.
That's exactly right. So I got one more business question. Then I'm going to ask a favorite dog memory. But somebody picks this podcast up, and we've had a few downloads in our day already on this thing. What would you say is an introduction to a prospect via this podcast that you would hope provoke them to call you?
Well, I would say this, that you're working with somebody already anyway, because we've already touched on that, right? It's just a function of doing business in this world. Where we set ourselves apart, and we don't think that we're smarter than anybody, and we're not going to say, oh, well, we're one of the tallest hogs at the trough now, so you should go with us because we've got some magic pin that can get us the number that you're seeking. But we are thorough. And that is the most important element if you are looking to place insurance, if you are looking to protect your business and or protect your employees. Their benefits program is you want someone who is thorough. And you can't be thorough unless you're competent. And we are both in that regard. And because of that, that is a big value prop for us. It's more than concepts for us, it's practice. And so because of that, for you to be thorough, you have to have expertise, but you also have to have experience. And so to me, it all boils back up to, if you're going to be working with someone to give you advice in this space, then you want a group that is thorough and capable of being thorough. And we think that our experience and expertise in the two areas of both benefits and property and casualty affords us the ability to be the most thorough, we feel like, in the marketplace.
I love that. A lot of times our clients, they unfortunately, sometimes clients think that our desire, our need to be thorough, to assess risk, because we're both assessing risk.
Yeah.
You're assessing risk on, damage or maybe loss of revenue or whatever it may be. We're assessing risk to make sure that we get repaid for the loans that we make. We both need to be thorough, and oftentimes our business owners are busy. They got to go put out all these fires. Sure. If we're afforded an opportunity to be thorough, we will bring the competency, like you said, to help you accomplish. There's a lot of synergies there. We could talk about this for a long time and help each other out. What we're going to do, I'm going to cut it there on that topic. Maybe we can do
right.
Maybe we can do 2.0.
Yeah.
But I got to ask you. You spent some great years in Athens, and you're
some better than others.
you're in the College Football Hall of Fame. We talked about this at Peachtree the other week. But what is your favorite memory of last year's championship run?
Oh, okay.
We talked about many that day. We both had different ones. But what's your favorite memory from last year's championship
now
run?
I got to remember what I said, because I might have just said, well, let me think of the first one that pops into my little gray matter. God, my favorite memory. You're hard-pressed to get past that championship game, I will say. That's tough. I think the last 3 minutes or so of the Georgia-Florida game in the first half, there at the end of the second quarter.
Oh, yeah.
That was, that sequence of plays, pick six, and the tip. So you got your two outside linebackers. One is making a tip in pass coverage to your other outside linebacker who makes the interception, and you're just going, if there was anything that's indicative of how dominant this defense is, I think it might have been that sequence. Because up until then, Florida's over there thinking, hey, we might mess around and beat these fools. And that thought was thoroughly extinguished there at the end of the second quarter.
Oh, we shut it down then. It was over.
That might have been. That's not a play, but I feel like it was kind of a moment. It really was in the space of, what was it? I think it was like a 3 or 4 minute span right at the end of the second quarter where golly, boy, this defense really is something. There's so many that I could burp out at you right now.
Yeah.
But
I love that one. It includes one of our greatest rivalries. We could have picked on Auburn in first half. That would be a little mean.
It seems like we're kind of piling on now.
Yeah, we are. And anyway, thank you for spending this time. I hope this helps you. I hope it helps your clients. we'll distribute this thing out. If we can do anything to help you and support you in your endeavor to meet new people, we want to help with that. And any closing comments from your side?
Well, I'll tell you what, this was a lot of fun, and likewise, I think because incidentally, we both work for institutions that are specific in what it is that they do, and not trying to do more than one thing. We are not a bank, and you are not an insurance brokerage, and so because of it, I think we could play nice in the sandbox together.
Yeah, let's go. And Matt, thank you for being here. Go Dogs. That's it for today's episode, I should say, of Regions Business Radio. Mike Salmon, take us away.